Good morning, everyone. This is Windsor Brokers live daily market outlook for Wednesday, 27th of March, 2013. Rather quiet Asian session and some activities seen at the beginning of European are the main highlights of the recent trading in the markets, with the Cyprus problem still being in the focus as euro remains pressured, awaiting basically the opening of the Cypriot banks. That was, according to the latest news, scheduled for tomorrow, Thursday. Cyprus is expected to complete its capital control measures today to prevent a run on the banks by depositors anxious about their savings after the country agreed the painful rescue package with the international lenders, and a lot of protests seen in the streets of Nicosia as thousands of people came out to protest at the bailout deal that they fear will push their country into an economic slump and cost many of their jobs. European leaders said that the deal averted a chaotic national bankruptcy that might have forced Cyprus even out of the euro and the eurozone. As said, the banks are due to reopen on Thursday, tomorrow. According to the latest information we have, Finance Minister Michalis Saris said that he expected the control measures to be ready by noon today, and he thinks that it will be within the realms of reason. He was not going into details with his comments, and just saying that the banks will open on Thursday, and we will look at the best way to limit the possibility of large sums of money leaving and not imposing punitive conditions to the economy, businesses, and individuals. Minister Saris said in the Cyprus television interview. The central bank governor said earlier that loose controls would apply temporarily to all banks. Earlier, the finance minister said they could be in place for weeks, and the banks have been shut since final bailout talk got underway in mid-March. We are talking about 2 weeks of closure. Protests are still with the high school students also at the parliament, Cypriot parliament in Nicosia. The first major expression of popular anger that after Cyprus agreed the 10 billion euro rescue with the European Union, International Monetary Fund, and the European Central Bank. As said, the euro remains under pressure, rather quiet movements during the night, and posting fresh lows at the beginning of European session. 128.15 seen so far. We're looking for a test of 128 on the downside, while the sterling against dollar jumped slightly off the recent session lows at 151.43, still within the range of 151.34 on the downside and 151.75 on the upside. Dollar yen continues, it extended its recovery of 93.52 to 50% retracement of the entire down leg from 96.12 to 93.52, where the temporary resistance was found. Dollar Swiss is attempting above 95 barrier, while commodities remain under pressure. The crude oil is currently at 95.90, losing traction of a fresh high posted yesterday at 96.43, but this could be seen also as corrective, as a strong uptrend is still intact, and the most likely scenario will be further extension higher. Of course, we're going to take a look in the technicals and have a more clear picture. Gold and silver are pressured. Gold closed yesterday below 1600 and dipped to 1592 so far. Still, the downside is still vulnerable as the failure to regain 1620 barrier and subsequent steady easing sees more risk towards the downside. According to the technicals, silver also under pressure. A fresh low posted at 28.22 earlier this morning. Now is correcting higher, but overall negative tone now is increased after the price dropped below the near-term range floor. Indicators due to be released or already released today are as follows. We had a UBS consumption indicator from Switzerland released at 7 o'clock that came at 126 compared to 118 forecast. German data came more or less as expected. The GfK consumer climate for March came at forecasted and previous 5.9, while import prices ticked higher to 0.3% from January's 0.1% and the forecast of 0.2%. Economic barometer from Switzerland is due at 8 o'clock. GMT forecast is 1.07, slightly better than February's release at 1.03. And then more important data come from UK, the final GDP for the fourth quarter showing no changes, minus 0.3% compared to the third quarter. Revised business investments for fourth quarter are again expected unchanged at minus 1.2%. At the same time, fourth quarter current account from UK, again no change expected, minus 12.8 billion sterling. Gap is seen to be maintained in the fourth quarter. The same amount was seen in the third quarter. America's start from Canadian inflation data. CPI for February is seen ticking higher to 0.6% compared to 0.1% in March, while core CPI is also seen slightly higher. 0.3% is the February's forecast compared to 0.1% in January release. U.S. pending home sales are due. This Canadian data due at 12:30, as you can see on your calendar. U.S. data pending home sales at 1,400 GMT February release, minus 0.3% is forecast compared to much more positive 4.5% seen in January. Crude oil inventories are due at their regular time at 14:30 GMT. 1.5 million barrels build was seen during the past week compared to draw of 1.31 million barrels in the previous week. A couple of speakers from FOMC. Member Evans is due at 1500 and Rosengreen at 1530. And that will be all from Europe and Americas. Far East kicks with the New Zealand building permits due at 2145 GMT. Minus 0.4% was released in January. We don't have the forecast. And the Japanese retail sales at 2350 GMT. February release forecasted at 0.9% improvement from January's minus 1.1%. And this is today's calendar. We're going to take a look now at technicals that most of you are waiting to see what we can expect for today's movements of the major currencies and commodities. Hourly chart for euro-dollar still shows quite a strong downside pressure as the pair basically broke below yesterday's the low of 2 days ago and yesterday's retest where there was a basing attempt seen at 128.26, but the upside remained capped under 129, very near 128.88 seen so far, and now fresh pressure comes more toward the downside with the negative tone dominating on the 1 hour chart, still seeing a downside more vulnerable. Confirmation for this comes on the 4 hour where we have a very clear bear trend with all indicators pointing lower and holding in the negative territory, also holding below their moving averages such as ROC 14 and the RSI 14 holding below their 7 days moving averages with the price being maintained by descending 20 days moving average currently at 128.88. That basically limited the brief yesterday's and overnight's congestion and the consolidative action. So the downside test is seen more vulnerable and pressured according to the negative structure seen on the lower time frames studies. On the daily, again, pressure seen on a break below 200 days below 200 days moving average 2 days ago, as the price for the third session stays below this significant previous support, now acting as a resistance. More focus will be seen towards the downside, where we have targets at 128.00 is initial one, which is round figure support, and the low of 30th of 30th of September 2012, and then more significant level that would come in focus in case of a further slide below 128 is 126.79, 61.8% retracement of the medium-term rally from July 2012 low at 120.42 to peak of 2013 posted in January at 137.10, as well as a low of November 2012 at 126.60. These are seen as our next downside targets as the negative tone continues to dominate and keeps the downside pressured. On the upside, we have initial resistance overnights, better seen on the hourly, overnights range top at 128.88 and then 129 as a round figure resistance, while any bounce higher requires more significant gains. I would say a break above 130.00 as initial and psychological resistance, close to one resistance, and as well as previous peak of 2 days ago at 130.47, a break of which is required to shift the focus higher and improve the current negative structure. That looks quite unlikely at this point, unless we have some more significant data coming out and news that could drive the pair in the opposite direction against the currently quite negative technical structure. So more likely scenario will be further extension lower. Of course, again, the all eyes are towards Cyprus, as some rumors heard this morning, again unconfirmed rumors that banks may stay shut for another couple of days, bringing further confusion in the markets, and basically the investors are awaiting the final decision of the Cypriot government that will give us some more clear picture. But in any case, the negative tone persists on the euro-dollar for now, and keeps the downside focused. Also, we are approaching the Easter holidays, so another thing that may slow down the market action, as we have another 2 days only. Good Friday will be holiday and the markets will be closed. More of this, of course, I will inform you at the end of the session. Let's take a look at the other major pairs. British pound against US dollar remains positive on the 4-hour chart, though the indicators are so far lost some traction on the pullback from 152.59, the 25th of March high, when the price dipped to 151.34 and being contained by a 4-hour 55 days exponential moving average. More negative tone is still seen on the hourly chart, as the price dipped below the previous low and below the 50% retracement of the uplift from 150.26 to 152.59. Previous low was at 151.42, marginally fresh low posted at 151.34, where the price stabilized for now, as the indicators are now in ascending mode. Yet more work is seen to be done towards the upside, and the regain of 152 round figure resistance and previous high of yesterday, in order to improve the structure and signal possible basing attempt at levels 151.34, 151.42. We're still far from this, but in any case, a break above 152 will provide relief, and the signal possible higher low that will shift focus again towards the upper barriers and upper target at 152.59. Conversely, failure under 152 will risk a lower top and a possible further extension lower, as a break below 151.34 will open 151.15, 61.8% Fibonacci retracement, and 151.00 psychological support as initial targets, with the possible further extension lower, risking a test of the strong support and the previous range floor at 1.5070. Daily structure on the sterling is still weak. As we can see, MACD is pointing higher, but still below its midline, while strong momentum is seen building up on the recent bounce of 148.30, especially that the pair cleared the initial resistances at 152.20, 152.30. The later one also being a very significant, previous very strong support and multi-year range floor, but so far failed to sustain gains after jumping up to 152.59. That was all seen. A quick reversal lower, and the loss of 152.100 again keeps the downside vulnerable at this point, and risks possible further retracement and further correction of the rally from 148.30 to 152.59, with the break below 151.34 recent low, and 151.00 seen as a trigger for a possible further extension lower, as the later is also marking 38.2% Fibonacci retracement. Dollar yen has so far failed its recovery rally from 93.52 low to under the resistance at 95.00, 94.89 seen so far ahead of pullback, but hourly structure is still holding a positive tone, and this still could be described as corrective action. From the other side, ascending indicators on 4-hour chart, but still in the negative territory, with price action being capped by 55 days exponential moving average, seeing again more risk towards the downside, as on the 4-hour chart we have a clear downtrend from the recent peak at 96.70, with the over 50% of the initial rally from 90.85 to 96.70 being retraced so far, and failure to surpass the 95 barrier to see the clear break of 95 barrier would still keep the risk on the downside for possible extension below the recent low at 93.52. That would risk slide down towards 61.8% retracement at 93 zone. These are the levels set to watch on dollar yen. Aussie dollar remains steady and holding just below its yesterday's fresh high at 104.96, with downside being so far protected at 104.60 by hourly 55 days moving average. However, we need to mention that the hourly studies, hourly indicators are negatively aligned at this point, as we can see that are breaking already below their midlines. That could see increased risk of possible deeper reversal. This is again corresponding with yesterday's mentioning of bearish divergence that is still present on the RSI and MACD versus the ascending price action. Still no confirmation of this, as the main supports are still staying intact. We are talking about levels at 104.40, 104.30, which are also which are seen as break points, and as long as the price holds above 104.30, which marks 50% retracement of the rally from 103.62 to 104.96. We are talking about level 104.29 and the 104.20, which is the previous consolidation range floor. Break of these levels would bring some more negative tone and weaken the immediate structure and prevent a pair from fresh extension above 105. Otherwise, bullish tone that is still in play on the larger time frames still sees potential for further extension higher, as stretch through psychological 105.00 is expected to open 105.26 next, and then 105.50 seen as the next targets. As we can see on the daily chart, despite being quite extended, the studies are still structure is still positive and keeps the upside favored. And finally, the dollar Swiss from I think we didn't mention it from the majors, positive tone of 90.20, especially that corrective action being contained, the downside at 93.50 by 38.2% retracement, and the ascending 55 days moving average sees again more potential towards the upside, as the price now attempts again through 95 barrier, 95.10 seen so far. Clear break here. This also marks the near-term congestion of past 2 days, on the upside being limited at 95, on the downside at 94. 70 sees possible sees chance for possible further extension higher, and the refocus of near-term targets at 95, 50 high of 8th of March, and 95, 65 fresh high posted on 14th of March 2013. Set positive structure still on the 4-hour chart sees the upside favored with the price action being underpinned by bullish 20 over 55 days moving averages crossover. And a quick look at commodities. As I said at the beginning, the oils, let's start with the ADX. 4-hour bulls are very strong at this point and keep the upside focused, while the daily bulls are now building up and gaining pace. That keeps overall positive tone of recent low at 89.35 in play for possible extension towards the upside targets 97.47 and the 98.63 peak of 13th of February 2013. Daily structure is positive and bullish as the price so far retraced exactly 76.4% at 96.43. Retracement of the down leg from 98.63 to 89.35. Lower time frames show the overextended overbought conditions as shown on the 4-hour chart, where the RSI is now moving lower and attempting to break below its upper limit line. That will signal some corrective action, while the other indicators are still pointing higher, except momentum that is moving already lower, and the stochastic too. So we can expect some corrective action at this point. I think it's more clear on the hourly, where the indicators already moved lower and signaling corrective action. Fibonacci and supports to watch come at first previous high at 95.63, now acts as initial support, along with 95.34, which is 23.6% retracement of the latest upleg from 91.82 to 96.43. And basically the pullback should not extend below 94.45. This is slightly below previous high and slightly below 38.2% retracement, as well as 20 days exponential moving average of the 4-hour chart. So ideal reversal point in case of any deeper reversal should stay above 94.45-50 zone in order to keep immediate bullish structure in play, and upside extension will be looking for 97 and then 97.47, our next upside targets. And I know that most of you are looking for gold's analysis. Pressure is still evident on the lower time frame charts, as the yellow metal on the hourly chart is in the descending mode of recent high at 1660, with the spike lower seen 2 days ago to 1589, and the upside the recovery action being capped at 1607. Since then the price is again ascending. Yesterday's close below 1600, and this morning's dips to 1592 keeps the downside under pressure. This is also reinforced by negative hourly studies on the 4-hour chart. Also the negative tone persists, as all indicators are in descending mode and pointing lower, and the 20 days exponential moving average is about to cross below the 55 days, just above 1600 level. That reinforces this barrier and keeps the downside more pressured. 50% retracement of the entire recovery rally from 1561 to 1616 so far contained the dips, but this is seen as a initial downside target, and good support and break here would trigger further retracement down towards 1582. That marks 61.8% retracement, and then the spike low of 14th of March at 1576. These two are seen as the next downside targets in case of break below 1590. On the upside, as said, 1600 offers solid support, solid resistance for now, and any violation of this level would delay bears in favor of some stronger action higher. We have good barriers at 1607 and 1613, above which the focus will be shifted again towards the upside target 1616, recent low high of 21st of March, and that 1620, our key resistance high of 26th of February, as well as 50% retracement of the larger 1684 to 1554 descent. And that's all from my side. Now you can submit your questions. Is there any question or a comment? We had a number of questions at the beginning, euro and sterling. I think we covered this. Question comes for the Dow Jones. We're going to take a quick look at the Dow Jones performance and see what are the expectations. Let's start with the daily to see that bullish structure is quite good and intact for now, though the overextended the conditions on the daily chart see some risk of possible corrective easing, yet no confirmed signal for this, as the price is continuing to push top to post fresh record high. 14,516 is the highest one seen so far, posted 2 days ago, with today's high at just under 14,500. Down to the lower time frames, 4-hour structure is positive to neutral at this point, as the price is entrenched within the range of 14,270 and 15,515, with the of course tone still holding more, being more positive at this point, as the price action has been supported by ascending 20 days moving average at 14,457 and the 55 days one at 14,400, still more focused towards the upside, but so far the recent range top at 14,516 is still holding the upside, but overall bullish picture, as I said, could see does not rule out further extension higher. On the downside, immediate support is at range floor, which is at 14,270, and then we have 14,220, which is 38.2% Fibonacci retracement of the upleg from 13,745 to 15,515. Overall, still more focus seen towards the upside, but break above or below this congestion will give us more direction at this point. Ichimoku studies are firmly bullish on the daily chart, as well as on the hourly and 4-hour, that supports the theory of further extension higher of the Dow Jones. And a quick look at the silver. As I said, silver remains under pressure, as we can see on the 1-hour ADX chart, where the bears are firmly in control, especially that price action broke below this near-term range floor. That was approximately at 28.50, extension lower to 28.22. Now risks further extension towards the downside, as 4-hour indicators are in the negative territory, as well as hourly ones. Hourly oversold conditions suggest that some corrective action could be seen, with the previous support now acting as resistance at 28.50. offering initial barrier at this point. That I would say more focus is still seen towards the downside and the possible test of recent low at 127.93 seen quite likely, a break of which will be looking for extension of the larger downtrend from September's 2012 peak at 35.36 that may look for extension down towards 27 and 27 where is weekly 200 days moving average. On the daily chart, breaking below the range floor and possible test of 27.93 seen quite likely as structure remains negative with upside being capped at 29.30, 29.45 zone, and only break above these levels would improve the near-term structure. And I think this is all for today. We exhausted our questions. We'll leave some room for our colleagues that in a couple of minutes we'll start the Arabic session. I wish you a nice day today. Of course, a lot of profits in your trading. Stick to our analysis and follow the trend, and you will minimize any risk in your trading. We're back tomorrow morning at the same time at 8 o'clock GMT, and that will be our last session for the week as Friday, due to Good Friday holiday and the market being closed, our trading desk and my department also will be closed, so we will not have a live session on Friday, which is 29th of March, and we'll continue regularly on Monday, coming Monday, which is going to be 1st of April 2013. Until tomorrow, I wish you a nice day and good luck in your trading.